Good evening, everyone. This is Ann Jansen from Team Celebrate, and we're going to have a special guest tonight, Mike Lantz. I've known Mike Lantz for a long time. He's gracious enough to share his CPA experience with us. Always had some good words of wisdom. So take it away, Mike.
You bet. Again, guys, for those that don't know me, my name's Mike Lantz. My wife and I are from Des Moines, Iowa. We've been around the network marketing industry for over 30 years. I actually am a CPA and financial planner. And early on in my career, I did a lot of returns for people that were very successful in network marketing, from Melaleuca to Longaberger Baskets and everything, Amway and everything in between. And I would do seminars on how to teach people how to maximize their tax benefits with their home-based business. And I actually picked up a lot of clients. So it was a professional development technique that I used to grow my practice as well. But, so I was just going to share some of the thoughts on what we can do. With the change in the tax laws, it's more and more difficult to have any deductions. The government gives us now a standard deduction. You no longer can deduct employee business expenses, and most people aren't itemizing anyway. The government's giving us a standard deduction. So really what's out there is those people that own a home-based business have that ability to take expenses that they're incurring anyway on an individual basis and turn them into business deductions. And again, these deductions can be used to not only offset business income, but if there's a loss, it can be used to offset your other income, your W-2 income, your dividend interest income, ordinary income. So it's important to understand, what you have in your hands can be a very powerful tool in keeping your tax dollars in your pocket as well. So the first thing I want to talk about was how the IRS looks at this industry. The IRS looks at this industry, and it actually is a red flag. If you're filing a Schedule C on your return, and you use that business code that says network marketing direct sales, which you have to do, that automatically is a little bit of a red flag. The reason why is that they've learned over time, over years, that they can come in and they can collect tax dollars, because a lot of the people that get into network marketing don't treat it like a business. They are trying to do is come in and say, all right, you're really not operating a business here. This is a hobby. And that's the worst case scenario. If you're a hobby, you have to recognize the income, but you can only take tax deductions to the extent of the income that you earned. But those expenses are on Schedule A. And again, most people aren't itemizing, and you're going to lose the value of all those expenses. So it's the worst case scenario. So I'm going to go through and pull up a PowerPoint presentation that I put together real quick. First thing is things you can do to demonstrate you're a business. Again, because you do not want to have the IRS come in and say that you're a hobby, okay? And first one is open up a separate checkbook for your business. If you're operating a business, you're going to open up a separate checkbook. You do not want to commingle your individual funds with your business. And it actually makes it so much easier when you go into your accountant, your tax preparer at the end of the year, if you have a separate checkbook for your business. And also, the second thing, you also need to open up a separate credit card for your business. So that's what I have in my pocket. You'll see that I have a separate debit card, credit card for my business, and I have my checkbook for my business. And all my business expenses are either written. I've either written a check or done a ACH, for a lot of my bills, or I use my debit Visa card. And that way it's very easy to track. And again, that very simple way to demonstrate that you're trying to treat this as a business. Then the other thing is document your planning. I mean, if those people that are running a business actually might put a business plan together at the beginning of the year and set some goals, document those goals, and it will demonstrate that, no, you're trying to treat this as a business. You don't have to make income. Don't get me wrong. Income isn't the determining factor as to whether you're doing this for business purpose or hobby. It's the intent of trying to make income. Okay. And what are you doing? Then also, are you purchasing tools? Are you purchasing enough tools to support that business plan that you put in to go out to build a business? Are you buying enough patches to not only for your own personal use, but are you buying patches to be able to patch other people or to give them patches till theirs come in? And so that's very, very important. I'm going to explain to you here in a little bit on a worksheet how you can deduct those patches that you're using for personal use as well. Document, write down the training videos that you're watching. Save them to favorites, put them on your computer. So again, all this demonstrates that you're trying to learn, you're trying to educate yourself. So write down those videos that you're watching in either a ledger, a journal, or on a day timer, in your notes on your phone, so that you have documentation. If the IRS ever came in, you can say, see, here's what I did to try and better myself and better my business. I think I didn't put it in here, but also right here is where you can put personal growth books. To me, personal growth is part of trying and attempting to become better individually, because I think the people that are very successful in network marketing are working on themselves harder than they're working on the business. The more time you can spend in doing some personal growth and documenting that, you can write it off. Remember, it's all a business expense as well. I think this is as important as anything, is attending every regional and corporate event you possibly can. Again, it documents that you're trying and supports that you're attempting to build a business. Now, don't get me wrong, I was in another business for many years, and there were some people that went to the events every year, the annual events every year, but it was more of a social thing. They were going because they loved to see all the other people. So this in by itself isn't going to demonstrate that you're treating it like a business, but when you put it with the other things, it helps demonstrate it. Okay. Make a list of all the prospects that you have and keep it. Okay. Don't throw your lists away. I've got notebooks there because it demonstrates the prospects that I am purposely trying to build a business. And usually, once you start making a lot of money, you don't have to worry about that hobby thing anymore. We got to a point where we were making significant money in network marketing, but it's at that very beginning stage, and especially in that first year, where you really have the opportunity to take advantage of the tax laws that use some of the losses that you might incur in your first year, just like you do in a lot of businesses, to offset some ordinary income from other areas. So again, make a list and keep it, and keep adding to it is a key thing. This is something that I found that has helped me in my business, in network marketing in general, is coming up with a system of documenting everyone I talk to and tracking them, so no one falls through the cracks. And what I'm using right now is a simple pad of paper, and every page has the person on there, and I'm documenting what I'm sending to them and when I'm sending it to them. So some of you know that I've used index cards, index cards in a recipe box, where I've written the names down of people, and I'm using that box to keep track so I don't miss anybody. So just come up with a system for you. If you come up with a system that works for you, that's demonstrating that you're trying to build this as a business. And again, you can show big losses, doesn't matter, and you can deduct them as long as you have intent and you're trying. So the key is to make sure that you're doing some or all of these steps. And then I've also have folders where I'm saving all my emails that are associated with building LifeWave, so that I have my communications there, and I save them. I went into my settings. I don't let them delete, because I want them here in case the IRS comes in 3 or 4 years from now and wants to look at my documentation. I'm going to have it where they can see the communication that I'm having, that I'm attempting to build this as a business. Best thing I can do is go out and make money and not have to worry about hobby loss, right? Here's a listing of expenses, the common expenses. What I want to talk about here is, and this comes from TurboTax, which is fine, but they list some common expenses that you can think about in your business. And then I've got a little spreadsheet that I've developed that you can take this a little further. And the idea is to take some of those less common expenses that you're incurring personally and turn them into business expenses. Vehicle and mileage, again, I don't depreciate cars. Okay. I find that the mileage rate right now at 67 cents a mile is more than what I can do if I took actual expense, especially I'm driving a lot of miles. So that can add up to be a very significant deduction. So I'm pretty aggressive on that. Now, how I do it is at the end of each day on my day timer, I write the miles that I've done for business on there. So all I have to do is run an adding machine tape on that. My cell phone, I take 75% of my cell phone bill in my as a business deduction. I'm allocating some because I just don't want to be that aggressive and take 100% because I do make personal phone calls on my phone. Okay. Business supplies, advertising. Now, advertising can be, our promotion can be your giveaway of your patches too. Okay. And documenting how many patches. What I'm going to find it easier for me is I'm keeping track. I'm putting all the patches that I buy in cost of goods sold. And then what I'm doing is backing out each month what I personally used. Okay. I'm finding that an easier way to do, or at the end of the year, right? Doing it on an annual basis. I know I'm using $49.39 in one of the legacy patches every day. So I know what I'm using. I know what that cost is, and I can take that out. I use maybe an LifeWave here and there, but not very often unless I'm having leg cramps. So, but I can do that there. Advertising, meals and entertainment's 50% now. It was 100% for a couple of years during COVID, but now it's back to 50% deductible. Now, guys, this is what I want to talk to you about on meals and entertainment. If you're doing this business with your spouse, don't be afraid to go out to eat once or twice a week and write it off in your business. I'll guarantee during dinner, you're going to end up talking about LifeWave and maybe somebody in your business and what they're doing. Okay. All you have to do is on the back of that receipt, write down who you had dinner with. And all you need is one business topic you talked about. That's it. And write that puppy off. Okay. Legal and professional, that could be your tax prep. If you're paying somebody to do your tax return, you can allocate the biggest part of that tax return prep right here on your Schedule C. Business travel, all the expenses for going on your conventions, okay, are all deductible. Now, in addition, Karen and I just went to Cancun. We had our board of directors meeting when we were in Cancun for our businesses. Okay, we talked business, not a lot, doesn't matter. There's nothing that says you have to have your board of directors meeting or your annual meeting for your business, your planning meeting here in Des Moines or in your hometown. You can do it anywhere else, and you can now deduct the cost of the flight and at least one night in the hotel, okay, and the meals that go with it. So, be aggressive. When in doubt, deduct is my philosophy. Office expenses, less common. Again, taxes and license, business insurance if you have that, repairs and maintenance. I'm going to go to another spreadsheet and we're going to talk about office and home deduction. So I'm going to pull up that worksheet, Ann, real quick. I put together just a quick Excel spreadsheet. The idea is to keep it simple and track your expenses throughout the year so that at the end of the year, it's very easy to pull together. And a lot of people, we use QuickBooks here at home. A lot of people want to keep it even more simple and just want to use an Excel spreadsheet. And I have an Excel spreadsheet called Check Register. And you put all your deposits in, you write every check in there, and you code it to one of the columns. Okay, it's pretty simple and all. What I did here was just to give you an example of the kind of expenses and how much it can start to add up. Like I had products used for promotion, 300, which is very small, really. $300 for the year. That's just 3 sleeves of patches. We've probably given that away already, but I've just put it in there, put 300 in there to have a number. Now, this is my logic and how you can deduct personal use patches. I don't think you can deduct personal use patches ever, but I do think there's a strong logic because the leadership in the company has told us that you need to at least be on the patches for the number of months compared to how many decades you're alive. So for me, I'm 66 years old. I really need to be on it 7 months. Okay. So that number, I could change this. And the way I can change this to a 7, it will automatically change the worksheet. And then how much am I spending on advertising and promotion? I just about $1,000 I put in here. Here's the mileage rate. You can put in your miles. I just put 1,500 miles. You can see that that adds up to be a significant deduction. I'm probably going to put more in the area of 4,500 on, okay, this year. Meals and entertainment. That's where Karen and I are. We go out to eat probably once every week or every 2 weeks at least. And again, so that number probably for us is going to be more in the 1,250 range. Okay. Convention this year, I couldn't go to convention. Okay. Karen and I unfortunately had a vacation, but Karen went to Florida, so she went by herself. Okay, so I put that in there. Internet, I put in the full amount and then how much you want to allocate in here. So you can just change this number and it'll calculate. I think 75% is a fair number. Some people they don't use I use my internet for streaming TV, so it's not right. I wouldn't be justified in using 100% for business. Does that make sense? Might even be pushing at 75%. Might be better at 50, but I just put that in there. And then there's office supplies, cost of equipment. I don't depreciate things. If somebody buys a piece of equipment now, if in my office I got a desk, I got all this furniture here. Okay, I depreciated it many years ago because all this came from my CPA practice. But if it was somebody personally that just now started an office and home for their business, they could take the value of the desk and all this furniture and write it off on their tax return. Instead of depreciating it, they would take bonus depreciation. You just need to list it all right here for your accountant. In my office, if you have a home office, you can take, you only allocate the percentage for the mortgage interest, the property taxes, the insurance, the repairs and maintenance on the home, but everything in the office is 100% deductible. Okay, does that make sense? From the computer to the adding machine to the lamps to the carpet, that's all deductible. And so you can list it all separate and create a good deduction for you. Then you got the office and home. You have 2 ways to calculate office and home. One is the simplified method where you just take the square footage of the office times $5. That would generate me about $720. Okay. Or you can do, and you do the calculation of square footage of the home versus square footage of the office, and you can see it's only 4%, but you start adding up the expenses, okay, of that home. And, Karen and I, and the cost of the home depreciated over 27 years, and that turns into a $1,500 extra deduction. So you can see up here now, I'm at $16,000 in deduction. In the first year of a network marketing business, most people are not going to make that much. That can be a tax benefit. That can turn into a big, huge tax benefit. If you only made $10,000, now you've got $6,000 that you can use to offset other income on your tax return. I'm just a believer there's just a huge benefit to having a home-based business. And I think the last topic, and then I'm going to open up for questions, because I think some of the best discussions I've ever had on this topic are when I open it up for questions. You guys do an awesome job of that. What I wanted to talk about to end this discussion real quick was entity selection. A lot of people want to know, well, what should I be? Karen and I have elected to be taxed as an S corp. One of my businesses, I'm a regular, because I incorporated many years ago, I'm a corporation taxed as an S corp. But most of my clients are LLCs, and that's just because they're easier to set up, they're easier to operate, and they offer the same legal protection. You don't have to have an annual meeting, a little different format, but you still make that election to be treated as an S corp. And when I explain what that is, there's extra cost. If for the person starting out in network marketing and just getting in for the first year, I would normally suggest just doing a Schedule C on your tax return. Okay. But once you start making $30,000, $40,000 a year, seriously, you should be thinking about incorporating or setting up an LLC and then electing to be taxed as an S corp. That's Form 2553. Pretty simple to fill out. Now, what that's going to do is you're going to have a separate tax return now for this corporation for your business. And it's going to take your net income, whatever you come up with net income over here, it's going to just pass through onto your personal return and you're going to pay tax over here. Okay. But here's two reasons why it's very powerful. One, you reduce your audit risk now. What did I tell you? The IRS looks at Schedule Cs, especially ones that are for the direct sales industry. You've just now taken it out of their radar screen and moved it off their radar screen. Plus, over here, as long as you have basis, you can show losses every year. Okay. And basis would be as long as you're putting money in to cover the loss, you're not using bank loans to fund your losses. Okay. So you can continue to deduct those losses over there and not be considered a hobby loss. Now, the main reason I do it is because over here, if you're making $100,000 in your S corp, you could take a reasonable salary of $50,000 out of that business. The other $50,000 then, because you still have $100,000 net income either way. Let's take 50 of it in wages. After paying payroll taxes, you're probably going to end up with about 45,000 left. We pass that through to your personal return, but it's not subject to self-employment tax, not subject to Social Security or Medicare tax. So I just saved a client I made that recommendation to last year that has about $150,000 in income, and we saved her $6,000 in payroll taxes this year by just making that switch from a Schedule C to an S
Mike,
corp. Yeah.
can you repeat what you're not subject to again?
You're not subject to Social Security and Medicare tax. Remember, on your Schedule C, if you had 100,000, that's going to come through on your personal return. You're going to pay federal and state, plus you're going to pay Social Security and Medicare tax, self-employment. So what I'm saying, by doing the S corp, we're going to get rid of that 13.5% on whatever we don't include as wages. I really recommend it, especially in this industry, because guys, you can make ungodly amounts of money. Okay. And all you have to do is justify a reasonable salary. Okay. So, when you're making, $100,000 a month or $100,000 a quarter, you can sit there and say, what is a reasonable salary for what I do? And most of it's coming because of the downline and the residual income. So you can see it's much better to have that taxed without paying Social Security and Medicare tax on all of it as well. So S corporation is just a perfect fit for this industry, but I wouldn't go to the expense right off the bat. Any questions?
First question is, how much does it cost to become an S corp?
I just did one for, Karen and I decided to set up a separate company, LifeWave. So I went out and I actually went online to Online Legal and actually set up my LLC for the cost of about $250. And it's Life Mindset is the name of our LLC. So that's where we put our LifeWave business. All the income from both of our positions are going into that corporation. So that's there. But now the joy of it is I'm a CPA, so I do my own returns. Okay. You're normally going to pay somebody, our firm would be about $350 to $450 for the corporate return, but now you don't have a Schedule C on your personal return. Okay. So that the price of your personal return is going to go down somewhat as well. Okay. Kind of offset the increase a little bit, but you're going to pay a little bit overall.
Thanks.
But remember, you're offsetting, you're saving 5,000 or 6,000 in taxes. Okay. So don't lose sight. Plus you're reducing your audit risk. But guys, I come down to it. The accounting is just a necessary evil, but we might as well take advantage of the tax laws and be as aggressive as you can. Okay. When in doubt, deduct. Allow the tax laws to keep some of your money back in your pocket. But when it comes down to it, to be successful in this industry, it's all about believing in yourself, believing in the business you got your hands on. And Karen and I are so flat out fired up about LifeWave and what the patches are doing for people. and just had a great story again this week from one of Karen's business partners who signed up. She signed up a friend, and she'd been having bruising, and she bruises very easily. And she's noticed since she's been on the patches, she's not bruising. And when she does, it used to take 2 weeks for bruises to heal. They're healing in a couple days. We're seeing some fun results from this from other people, and it's just a matter of doing more. This business, what we found in the other business we were in, it's about creating momentum. Most people build big businesses by doing a couple 90-day runs, just putting balls to the walls for 90 days and then taking a rest and then get back and do another 90 days. Everybody can run hard for 90 days and watch what happens. So that's what I'd suggest. We're coming up on January 1st. Everybody makes New Year's resolutions. Consider making one for your business, for your family. And I know Karen and I are doing that. We spent a little time when we were in Mexico trying to figure out how do we take this to the next level. Okay. Where are we going in our lives? So what are we going to do when we grow up? Anyway, it's good to see everybody, and to see some new faces. Don, I can't wait to get to know you better. You sound like you're building an awesome business.
Signed up my 47th person yesterday,
That's
and
awesome.
I'm at, I think, 19,500 so far this year,
Awesome.
which
That's
that's more than I made in 5.5 years with TN. So,
That's awesome. That's cool, Don.
yeah, it's
Yeah,
very
we're gonna
cool.
make a lot. We're gonna make a lot more. Okay.
Yes, we are. I
Yes, we
agree.
are. And yeah, it's especially with the company, what their vision is. Okay. But
Absolutely.
we just gotta do more faster. Okay. And that's it. It's like a pressure cooker. The more you do in a short period of time, it's the same amount of work you might do over 6 months. If you pressure cook it and squeeze that same amount of activity into 3 months, it's amazing what it's like. Okay.
Absolutely.
Same
I
amount
have
of
a
work.
lot of people
Yeah.
right now, they want to wait till after the holiday. So my
Yeah.
first
Oh,
week of January, I have call this person, call this person, call this person, call this
yeah.
person.
And
But
it's
that's
always
okay.
crazy. December was like that in Team National too, so everybody
Right.
wanted to wait. So it got quiet around Christmas, between Christmas and New Year's. So, but yeah,
I'll say, I don't know if there's any other new people on. I have not missed a week of a paycheck since March.
same here.
That's when I started.
Great. Well, it's nice to meet you, Don. I know we
Yes.
met in Team National, but not like
Not,
this.
not,
Okay.
not like this. Yes,
No, it's
exactly.
fun to see you going.
Thanks. I appreciate
You
that.
bet. No.
So Mike, with the LLC, if a person does the LLC this year and then the S corp starting January, does
Right.
the LLC still do an individual tax, or does that go on Schedule C?
If you do an LLC starting January 1st, okay, yeah, you can set up your LLC now in December, and it'll be effective. It's when you transfer money into your checkbook is when the business starts. Okay.
Okay, so
Okay.
like if I did mine last spring when we were talking about it,
Yeah.
is
Yep.
that a separate tax return than my tax
Yeah.
return?
You did not elect S status, so
Not yet. No.
that income will be taxed on your Schedule C.
Oh, perfect.
You
That's
won't file a separate return. But
okay.
you'll use on the Schedule C. You'll put
Yep.
the federal ID number on the Schedule C for the S corp,
Okay.
and you'll use the LLC.
Name.
And then
Yeah.
you need to file. You can do this. It's an easy form, 2553.
Do that for January 1st.
Yeah, and see, normally what I do then is I take wages for about half of the income. So if you make 20,000, I'll take 10,000 of it in wages, and the other 10 I'll pass through. Okay.
What do you mean pass through? I don't understand
You
that.
get it on your S corp. If you made 20,000 on your Schedule C, it would all show up on your return. 20,000, all of it be subject to self-employment tax. On the S corp over here, you can take 10 of it as wages, and that's going to show up as a W-2 on your personal return. And then it's going to have one form over here called a K-1. So it's
Yep.
going to pass through the other 10 or 9,500 after the taxes you paid on the wages. It's going to pass through, but it's not subject to self-employment. That's it. You're still reporting the same, little bit less money over here but you're not having tax, you're not paying payroll taxes.
I
on half the month.
understand finally. Okay, awesome. Woohoo!
Cool. Yeah. It's a pretty slick way to do it.
Well, I'm glad you understand.
Well, you
Well,
don't need
only
to
because-
understand. You don't need to understand totally.
No.
And it's something though, you just need to talk over with your accountant. Okay. And if you don't have one that understands it, I can do it from Des Moines. Okay. So
That's
you
just
know,
it. We've had all of the farm stuff together and Rod and I filed jointly. So now you throw in this new thing. And my viewpoint last year was, well, you can't deduct that. You can't deduct that. You know, and I didn't know enough about it to push for much, you know. So I
Yeah.
don't know. I'm thinking, do I find someone new to do just the business part? Do I still file with Rod? What do I, you know, I
oh,
don't
you
know.
want to file joint, you want to file a joint return. Okay. Because you lose a lot of benefits by filing married, filing separate. So you want to file joint, you want to use the loss that you can generate from this to offset the farming if there is losses. But you know, if you're aggressive and you're taking everything you can, you might show a loss for 1 or 2 years. You know, there's that saying, once you get into the 3rd year, you know, if you're Schedule C, you don't want to keep showing losses because then they're going to look at you from a hobby loss. Oh, are you really doing this for business? But if you're really trying and you're doing all those things that I did, that 3-year rule doesn't mean anything. If you're really trying to build the business and you're doing all those steps that I said, I would sit there in front of an IRS agent and argue till my teeth fell out. Okay.
Probably argue better than I can though, because
Yeah.
you know a little bit more.
Yeah.
Mike, would you say, can I just share, Mary? Don't be afraid of it. Embrace it and just use, are you sending out those spreadsheets, Mike, as kind of tools in the
Yeah. I can. Yeah. And I think we're going to send them out and do it probably in the Facebook page under files.
Because Mary, you're going to like this. It's going to be fun once you start
Right.
to grasp it. It is fun.
One
Fun.
worksheet
Hey.
that the spreadsheet, again, what you got to do is, if you have a separate checkbook and a separate credit card for your business, is when I'm out to eat, I don't grab from my personal card anymore. I grab from my business card. I'm going to figure out how to get that. I'm going to make sure it's in my business. Okay. And all I have to do is write on the back of the ticket, Karen, and I just talked about a prospect, and we can write the name down. That's all you have. Doesn't have to be. That's the only kind of document. So then I keep that receipt, and I come back and I have a folder, January, February, March. I have a hanging folder for each month, and I just put it into the month. It didn't hurt. That's it. So if I ever need it sometime, I can dig it up. Okay. It's pretty simple. But then at the end of the month, all my transactions for my spreadsheet are either on my bank statement or they're on my credit card statement. So all I have to do then is enter that information onto that spreadsheet. Real simple.
Yeah, I haven't done that either, having a separate account.
It's easy.
Everything's been
That's what I
run
recommend. Again,
a
all
regular
all
bank
that
account.
documents, and you can open up a separate checkbook for free. It doesn't have to be a business account. It can be a separate personal checkbook.
Okay.
Okay. Just something where you're keeping it separate, because sometimes some banks charge you more for a business account.
And mileage, there's so many things for mileage. So if you go like, I went to a retreat last weekend and got 4 prospects. So you write that off. That was, 140 miles because we went to the cities. And so everywhere you go.
Did you have a meal? Did you have a meal while you were there? Was there a cost to sign up for the retreat?
Yeah, no. Yeah.
That's all of it. See what I'm saying? That whole thing is written off.
You can do that.
It can be written off because you're using it for developing clients.
It's remembering what to do. I mean, it's like, as you do it, it's like, oh yeah, that's right. I went, such and such a place, and it was
Change
how many
your
miles. Change the
mindset. Change your mindset to always writing it off and then thinking, all right, I can't take that. You know what I mean? My mindset is I'm writing it off.
Yeah, it's just good to keep that little notebook in your car, somewhere in your car, with a pen that writes in the cold weather. You have a special pen for that marker. And like every time I go somewhere, I just write it down, you know, because you forget too easily. So
But Mike, would you say, especially if you want to grow your business in another area, and say you drive to Branson and you start prospecting, you go out for dinner and you stay overnight, and right? Mike and I don't go on many vacations anymore.
I haven't been on one that I haven't written it off in, I say 20 some years. Okay. So, and see, and everybody else is afraid. So you got to look at, first of all, the chance of getting audited is very slim. They are very short at the IRS. Okay. And especially on the corporate side. Okay. So, you know, if the chance of being audited is less than 3%, okay, I would rather be aggressive. If I ever get audited, then, you know, they just slap your wrist, you pay the tax, you pay the penalties and interest. But the odds of it, again, knock on wood, I've been doing this for 30 years and have never been audited. Okay. I've only went through probably 3 audits for clients in 30 years of being a CPA. Okay. Now, an audit, you got to understand, they consider an audit where you get a letter that says you didn't report a 1099. That's an audit. Okay. That they consider that an audit. Okay. But it's just missing one item. Okay. But a full-fledged audit, I've only been through 3 of them, but I'm not afraid of them. You know, they're just doing their job. You know, the IRS agent and most of them are pretty good people. Okay. So you don't need to be afraid of them. They're not trying to come out to get you. Most of them are, I like to leave them a little bone because I let them chase something. But again, my point is, I'd rather have somebody be a little more on the aggressive side than the other side of it because of just the numbers game. Make sense?
And I like that comment, reminding everybody that they're just people, like, you know, they're just people doing their job.
Mm-hmm.
My son helped audit the IRS, by the way. He worked for the Government Accountability Office as a CPA, and he's just doing his job.
Right.
But 19, I started doing Tupperware, and I've had a business for the last 40 years as of Friday, a home-based business, and I've never been audited.
But it sure can help save some taxes.
Fabulous.
And it's a tax write-off.
So my mileage, you live out in the country where your office is, your home office is, and you go to the post office and you go to the next store and you pick up a couple things and then you drive home to your office, you deduct it.
Yeah.
I thought so, but I'm just trying to give
your
Mary a
office is
couple
your home.
ideas.
Yeah, your office is your home. So unlike if you work somewhere from your home to where you work, that's not deductible. Okay. But here you are at home. That's where you work. Okay. So if you go to somebody's house to show them or deliver patches, or if you go to a show, you go anything, basically, if you're going to the bank, remember, best thing you do, even trips to the bank, sure that you plan your trip so that when you're going to the grocery store, you're going to the bank. So now you're deducted your mileage going to the grocery store.
Or you're mailing something, you know, it just,
Yep.
yeah.
Yeah, exactly. That's what I'm saying. You can be aggressive mileage at 67 cents a mile. Oh my gosh, it adds up. All right, guys, I'm going to sign off.
yes,
Thank you,
so
Mike.
much, Mike. I
Thank
really
you
Thanks,
very
appreciate it.
much,
Mike.
Mike.
Guys, I hope this helped. See you
Thank
later,
Rick.
guys.
Yep.
Bye-bye.
Thank you.